In this video, I've got a quick 5-minute guide to the US dollar JPY. Stay tuned. Hey traders, a very warm welcome to you. Okay, US dollar Japanese yen, otherwise known as, let me reset that screen, otherwise known as USD JPY, which stands for United States dollar against the Japanese yen. So what exactly do we have in front of our screen when we're looking at this chart? USD JPY is telling us how many Japanese yen we get for one United States dollar, or flip it on its head, how many Japanese yen is required for me to purchase one United States dollar. Think of yourself as a Japanese citizen with yen. You go to a bureau de change. This is exactly, you say, okay, the guy says, okay, the exchange rate's 115 or whatever that is in Japanese, and so you've got to count at 115 and you get $1 back. Flip it to someone who's in America, they want to buy some yen, they go to a bureau de change and they say, okay, $1, that'll give you 115 yen. That's pretty much what is being quoted when we see this chart. And as traders, we're trading the differential of exchange rate between the two. Now, US dollar is obviously United States dollar, that's for United States. Japanese yen, obviously for Japan. Each central bank is going to do things and manipulate interest rates to affect the value of that currency. So obviously, we have the Federal Reserve and we have the Bank of Japan, which are the two central banks which will tweak and adjust interest rates as they see fit, to be honest. So, and obviously this is economics. If you want to find out more about economics and stuff, go and check it out on Google. This is purely more for trading perspective and what it actually means when we're looking at the chart. I think we can lose sight of that when we're trading currency pairs. So the value of these currencies can be affected by domestic issues. So things that are going on in the United States, like the non-farm payroll numbers, which is kind of the jobs, the amount of people who are in jobs, the amount of people who aren't in jobs, the output from factories, interest rates, all this kind of stuff. And the same in Japan, you know, how productive the economy is, how much unemployment there is, what are the interest rates, in other words, what's the currency kind of worth, what do you get back for carrying it, all those kind of stuff. So, you know, US dollar JPY will be positively correlated to any other currency pair that has the USD in front of it. So stuff like USD Swiss franc, US dollar CAD, because the US dollar is the base currency. And this is the kind of thing to remember, guys, is that you've got 4 different ways that price can move, 2 or 4 depending on how you look at it. If the US dollar strengthens, then this price is going to go, this price chart is going to move higher. You are going to get more yen for your dollar. So let's say, you know, we're in at 110 and US dollar strengthens and the price may change to say 150. All of a sudden, for that $1, it buys us a lot more yen, which in theory, if we're in Japan, we can spend a lot more stuff, right? So the currency becomes a lot stronger. Or the US dollar could become weaker, and that 120 now only gets us 100. A couple of weeks ago, it got us 120 yen and we could spend 120. Now it only gets us 100. We go into the supermarket in Japan, we can only spend 120 yen less. The US dollar has got weaker. Now, if we flip it on its head and we say, okay, Japanese yen is getting stronger, how is that going to affect the price of the currency chart? Well, it's going to move the price down, the inverse of what how the dollar would affect it. So in other words, if the Japanese yen is getting stronger, all of a sudden now, instead of having to give 120 yen for your $1, you only have to give 100 yen. So you're giving less because the yen's getting stronger and you're getting more dollars back effectively, aren't you, for your yen? And flip it on its head the other way around, it's getting weaker, the price is going to go high. So there's 4 ways that we can see will affect the US dollar JPY. The strength of the US dollar JPY, the weakness, the strength of the yen, or the weakness of the yen. They will all affect the direction. So it's interesting to see that if you find strength and weakness in this currency pair, then you're going to get a double whammy in the movement, and same the other way around. It's a very popular pair, guys. Very, very low margin to trade. Spreads are going to be 1 point or less, whichever you're trading. Intraday wise, you know, it's got a lot of range. It's very good to trade when stuff is going on in Japan, because it's one of those key currencies that everyone's watching. It's a very, very popular currency to trade as well. it's obviously with US dollar being kind of the biggest, United States being one of the biggest economies in the world, and Japan being the biggest economy as well. When there's a kind of mismatch of how people perceive what's going to go on, and whether there's a question as to whether interest rates are going to rise or not, or whether economies are changing, that's when volatility will change. That's when you'll get opportunities. Really worth putting on. If you trade currencies, it's really one to trade. If you're day trading or a swing trader, it's definitely worth keeping an eye on for your specific setup. Anyway guys, that's my 5 minutes. Hope you enjoyed the video. Thumbs up if you did. Don't forget to subscribe if you haven't already. And breathe. And good trading. Take care. See you in the next one. Bye bye.